Despite the impression from the political conventions, the US presidential candidates don't disagree on everything. Whether Donald Trump or Hillary Clinton wins the White House, infrastructure spending looks set to rise. The Democratic Party platform, for example, promises the most ambitious investment in American infrastructure since President Eisenhower. And Mr. Trump has promised to build the greatest infrastructure on the planet Earth. Little wonder infrastructure is the buzziest buzzword on Wall Street right now. But how exactly are investors playing all this anticipation? Now, Markit, which is the creator of the iBoxx series of bond indices, has just launched an infrastructure index that it hopes is going to get used as a benchmark. Be careful though, it might actually perform poorly if infrastructure spending increases. Because it contains a ragbag of corporate bonds, the bonds of companies like utilities and oil pipeline operators, rather than bonds that finance specific projects, the index is moving pretty much in line with the rest of the corporate bond market. In backtesting, the only exception was around the turn of this year when it was underperforming because it's stuffed with oil and gas companies whose risk of bankruptcy shot up when the oil price went down. A fiscal boost from infrastructure spending is likely to stimulate the economy, or at least inflation if it's financed by government debt. And that's the sort of thing that's going to drive up interest rates to the detriment of bond prices. If infrastructure is financed by private debt, that could be a drag too if it means more bond supply relative to demand or weakens the credit quality of the issuers in the market index. So investors might be better to look for the direct beneficiaries of increased spending. And they might look in investment products that don't even have the word infrastructure stamped on them. One recent outperformer is the American Industrial Renaissance Exchange-Traded Fund. It's a small and mid-cap equity fund whose holdings include the civil engineer NV5 and electrical wiring supplier Encore Wire. It's up 17% this year compared to just 6% from the S&P 500. Now, whether your choice of chant is build a wall or building bridges, investing in the builders themselves might be the wisest choice of all this campaign season. Stephen Foley, Financial Times.